Dan Hughes, it was a rough Q1 earnings season, at least on the top line because of all the currency problems. And a lot of people say that valuations are stretched right now. So should people sell in May and go away because there's still time left?
Hey, Greg, thanks for having me on. And as investors, we're looking at the market and we're looking for opportunity. And there's still certainly opportunity that exists out there, but it is of much more specific nature now. It's really difficult to get the returns that you're looking to generate from a holistic index level in today's market.
All right, let's talk about some of the sectors where you can find returns. You say it's hard, but where are they?
Yeah, it's becoming increasingly difficult, particularly on a holistic level. And for us, as we go out and try to identify specific opportunities in a couple of different sectors, we like healthcare, we like tech, we like some industrials, but within those, it's just one or two names. It's very, very security specific today, and it's more so than it has at any time in the recent past.
What about energy? We got a note out from Goldman Sachs saying it's still overvalued. Meanwhile, we're hearing from other people that says, all right, maybe $60 a barrel is the bottom. We can head up from here. Where do you come in?
Yeah. I think we're going to be somewhat bracketed somewhere between the $65, $85 range for somewhat of the foreseeable future. In terms of investing, we're pretty neutral on energy today. We're not getting into it. We're still not comfortable with the names. And at Vaughan Nelson, we run a little bit more concentrated portfolio. So we're trying to identify really in either our mid-cap strategy, we only have 62 names. Inside of our select strategy, we run 25 names. So for us to try to stretch and get into energy today, we don't need to push it.
What's special about mid-caps? Because this is a place where you guys specialize.
Yeah, exactly. So we've run our mid-cap strategy now since 2006, and as we look at the market, the way it's playing out, we really like the way the mid-caps are positioned, right? With large caps, you have the dollar strength and elevated dollar. With small caps, you have some structural concerns around level of IPOs and privatization of the attractive smaller companies. So if you're getting funneled down from the top side and you're getting funneled in from the bottom side and you're getting pushed toward the mid-caps, we think that there's a really nice investment opportunity that exists today.
And then finally, what about the U.S. versus Europe and Japan? I would say that up till this point in the year, people have been saying, at least the fund managers that come in here and speak to me, that put your money in Europe and Japan, because Europe is really at the beginning of the quantitative easing cycle, and Japan is really heck bent on Abenomics.
Yeah, no, that's a fair point. But as for us at Vaughan Nelson, we are domestic investors here today, and we still really like the opportunity that exists for us. We've been able to create some attractive portfolios. If you look at some of the characteristics of our funds, we tend to own higher quality companies. They trade at a deeper discount with more stability around the companies that we own. And if I can line that up against any type of index inside the U.S. market, I can say, look, we can still generate returns for us in today's environment.
All right, thanks a lot, Dan.
Thank you, Greg.
Thank you for watching The Street.